Unless you have a stack of cash laying around, getting a mortgage is an essential part of buying a home. For most people, it's the key to turning their dreams into a reality. Today I'm sitting with Andrew Wells, a trusted mortgage lender, and we are going to discuss the top 10 questions that people have when buying a home. At the end of this video, I'll have 2 bonus questions for you guys that even if you're already a homeowner, you may not know the answer to. My name is Dina, your local DFW realtor. Make sure you hit that like button and don't forget to subscribe for future videos, okay? You can visit my website, newhomeswithdina.com. You can search for new construction homes based off of your own criteria, book a direct call with me, or download a free 10-step buyer's guide. Okay, let's get into the questions. So Andrew, what is a mortgage? Some people may not even know what that is. So how would you explain it in layman's terms?
Yeah, great question. So simply put, a mortgage is just your normal loan, but it's tied to the property. So the lender uses the property as collateral. We give you the funds to purchase the home. In return, you make promises to make scheduled payments on the home while building equity. Of course, if those payments aren't made, the lender does have the right to foreclose in certain cases.
Okay, so I have a question at the end for you about that process. But okay, so I always hear about like getting pre-approved versus pre-qualified. What is the difference?
Yeah, definitely. Great question. And this is something we really like to focus on with buyers when they come and go through the pre-qualification or pre-approved process. So pre-qualification is where we either verbally take your information for credit, income, and assets, and we give you a general idea of where the buyer can purchase.
So you don't verify with the pre-qual?
In some instances, we do. So you can do a pre-qual with a soft pull. When you get to the pre-approval, that's the hard credit pull where you verify all documents pertaining to credit, income, and assets. The biggest difference between the two is when you go to make an offer, you want to be pre-approved. It holds a lot more weight in the market when you're shopping, as opposed to a pre-qualified or a pre-qualified letter. When sellers see that, they might have some questions to whether the lender has done their due diligence to make sure that we can get the job done.
I agree with that because from my experience, if I have a listing and someone comes with like a pre-qual letter, obviously you're going to entertain all offers, but that pre-approval definitely holds a lot more.
Definitely. And just to add a note, a lot of lenders like us, we do fully underwritten pre-approved letters. So we will take your documents, send them through the underwriting process. So at that point, all we need is property approval to get the job done.
That's awesome. And just so you know, Andrew actually helped me buy my house. And I don't think I would have got it if it wasn't for him because he was so patient. And I actually felt like I was their only client. And I know you have so many clients, but the way that you just work with me, it was great.
I appreciate it. It's a team effort. It takes a good agent and a good lender to get the job done.
Okay, so my next question is, what are the key steps to getting pre-approved for a mortgage? Like, how do you prepare?
Yeah, definitely. My best advice is, first of all, always talk to a lender early, even if you're 6 months, 8 months away. Let's go ahead and have that conversation so we can start putting together a detailed plan on what we need to do to specifically get you ready to purchase. But just an overall general view of what you need to do. We'll start with credit. You want to make sure your credit, typically 620 is and above is the mark you kind of need to be in. If you're falling short of that range, again, talk to a lender because they can advise you in some different strategies to start preparing your credit to be able to purchase. So number one, credit, 620 and above. Number two is your income. Typically, you want to have 2 years of continued employment. If you don't have 2 years, you've maybe changed jobs a couple of times or you've had a layoff. Again, talk to your lender. Call them, let them know the situation so they can advise you specifically. Then number three, we get to the asset side of things, down payment and closing costs. You want to start having some savings to be able to provide a down payment and to be able to take care of closing costs. These fees and costs can vary from loan type to loan type. So again, you'll hear me say it 100 times. Talk to your lender early. Let them put together a game plan for you so you can start preparing ahead of time and not have to do this in 30 days.
Okay, absolutely makes sense. So he said call him before you start. And then, well, call me first. Then I can connect you with him. So that is the way you'd want to go. My next question, you mentioned different loan types. So what are the different loan type?
Yeah, so we'll start with conventional is usually the most common loan type. Then you get to FHA. Then you have your VA loans for veterans and spouses of veterans, surviving spouses of veterans. And then you have USDA loans, which are used for rural agriculture purchases, and they have 0% down payments. So do VA loans, they have 0% down payments as well.
And that's awesome. With us being in Texas, there's probably like a lot of rural areas
Definitely
that qualify for that loan.
Yes, 100%.
Awesome. So make sure you reach out to us. Okay, so when it comes to getting a loan, a lot of people worry about the down payment or down payment assistance. Or so typically, what do people need saved for a down payment?
Yeah, great question. So typically the amount you're looking for, FHA is 3.5%. Conventional, you can do a 3% down payment.
Okay.
We usually advise a 5% down payment just because of the rate discrepancy between 3% and 5%. So we usually do recommend 5% there. VA is 0% down payment, but you do have closing costs factored into that. And the same with USDA, 0% down payment, but you do have closing costs factored into that. There are down payment assistance options available, but what we typically recommend is, hey, start saving for a down payment, because what happens with your down payment assistance loans, they come with a higher interest rate. So if you can avoid it, we usually suggest you do, but if you don't have that option, talk to a lender about what's out there, and they will guide you in the programs that are specific to your area and your state.
Okay, perfect. I know you mentioned closing costs. So most people think that you just have your down payment and there's no additional costs.
Yeah.
So you do have closing costs when it comes to buying a home. Typically, what is that cost? What does it entail? Kind of give us some detail on that.
Yeah, closing costs is a very big, broad, encompassing term. When we get more specific with what that breaks down, it's going to be your title fees. Your escrows are included in closing costs. So your escrows are what you're paying for taxes and insurance. Obviously, that's going to vary from property to property. And then you have your things like your appraisal and any type of rate buy downs if you're interested in that type of thing. We usually advise that closing costs to be anywhere between 2 and 6% of your loan amount.
Mm-hmm.
It's important to get with your lender and talk to them about what to expect for the property purchase range you're looking to purchase in. Sometimes the closing costs, as you know, can be covered by the seller, but we typically advise to prepare to possibly pay your closing costs just in case that's not a reality. It depends on market conditions and how things are looking.
And it depends on your realtor, because if you have a realtor like me, we're going to negotiate as much as we can. And typically, a lot of times we'll get concessions back. I'll try to get concessions back from my clients, which can go towards closing costs. So closing costs is an additional thing you have to save for when buying a home. And if you don't have to pay closing costs, because I've had that happen before with some clients, great. But let's be prepared ahead of time and save some money towards that. So the next question I want to ask you, Andrew, I hear a lot is about interest rates.
Yeah.
You know, a lot of people are saying, oh, we're waiting for the rates to go down to buy a house, or, you know, my interest rate is high. What is an interest rate and how does it affect your monthly payment?
Yeah, definitely. Great question. I always start with interest rates change every day, sometimes multiple times a day. You'll hear me say it 100 times. Talk with your lender and get an idea of where things are. So how interest rates work is they are tied to the bond market. So as the price of bonds get more expensive, rates go down. As the price of bonds get less expensive, rates go up. Trying to time the interest rate market can be difficult because we don't have a crystal ball. Even the smartest people on earth don't know exactly what's going to happen with interest rates.
Yeah.
And a lot of different factors can affect where your specific interest rate will be. So credit, loan type, down payment, these factors all have a massive influence on where your rate is going to be. We typically advise getting with your lender, talking about interest rates and payments, trying to strategize where you need things to be for your monthly budget, and you'll have your lender in your corner advising you on the flow of the market and what's happening on a week-by-week basis.
Yeah, and what they say, right? Date the rate, buy the house.
Yeah, exactly.
But you do want to make sure if the rates were to increase, you do want to make sure that you can afford the home at the rate that you purchase it at, because just in case the rate does not go down and you're not able to refinance, you want to make sure you can still afford your mortgage.
100%.
Right.
And there's a lot of interesting strategies you can start taking to tackle your interest rate. Some buyers are interested in permanent rate buy downs or temporary interest rate buy downs. It's not a one size fits all approach. It's more tied to your personal financing and what works for you. There's pros and cons to each rate option, and putting together a game plan with your lender and just making sure you're viewing all options is number one importance, to make sure that you have something tailored that's going to fit your financial needs.
Yeah, awesome. And I do know that, like, if we reach out to you, right, as a buyer, and you start that process, you can lock them into that rate during that process, right?
Yes, you can. So you have options to lock in your interest rate while you're shopping. Some of my clients, they want to float till after they get a contract. It depends on market conditions. Typically in the higher interest rate market, which unfortunately we are in right now, typically we don't advise locking before your shop when rates are high. There's a likelihood that they might come down in the near future. It can be just the opposite. So having that conversation with your lender and seeing what they think, getting that second opinion makes a huge deal to be able to strategize how you're going to approach the market.
Yeah. So if there's any tip that we give you before you begin shopping for a house, viewing properties, get with a lender, get with someone that you trust, because they can advise you properly on the way to go. Okay, so typically, how long does the mortgage process take? So say if they found the house, we're getting pre-approved. How long does that process take?
Yeah, another great question. It can vary. It depends on the amount of work we do up front. Me, typically, I like to tackle all the obstacles before you go under contract. I've done closings as quickly as 14 days. That's
like cash.
Yeah, that's really quick.
That's awesome.
But that entails getting pre-approved and going through the underwriting process before you are under contract. Typically, that's the way to do it. If you have time, let's go ahead and slow play this, make sure everything's taken care of. So when you're under contract, you can tell you put your feet up and get this done in 14 days. Typically, the mortgage process does take about 30 days. The lenders can get it done in 21, and that's typically what we shoot for. But the overall answer is if you come into a lender, you have a contract, they haven't really seen your docs, they're going to advise you 30 days. It can be done quicker with preparation and just being ready for that.
And then you just saying that, like, if there is a house and there's multiple offers and you already went through that underwriting process with your lender, Andrew, like, that could put you like ahead of all the offers, because they can call your lender and be like, and he can vouch, be like, hey, we already got this whole underwriting done. We can close in 15 days. And a lot of sellers are like wanting to move. They no longer live in the property. So being able to close earlier is a huge, huge benefit for them. So it may put your offer ahead of others. So
exactly. And the great thing is there's no downside to getting pre-approved if you're underwriting early. It doesn't commit you to your lender. It doesn't mean you have to use them. You don't have to pay anything up front. All it is taking your documents, sending you through to the underwriter and saying, hey, we can guarantee you can get this done. So only positives, only upsides for being ahead of the game.
And that's awesome. And me as a realtor, I do recommend my clients shop around maybe 2 to 3 lenders just to make sure that what they're seeing is correct. You're getting the best option for you, and see what hidden fees are in there as well. So that's just my recommendation as a realtor. So Andrew, what would you recommend, or what tips do you have to a first-time home buyer that plans on getting a house in the next year or two?
Yeah, definitely. Number one, take care of your credit. The biggest thing is if you can hold off on new inquiries 6 months before you purchase a home, we're going to advise that so your credit doesn't take an unnecessary hit. So let's hold off on any new credit cards, any new shopping for the time being.
Noted.
Yep. Work your same hours. If you are an hourly worker, try to maintain where you're working. If you typically work 40 hours a week and you have some PTO saved up, you need some time off, use your PTO because we can account for that. So maintain your job, maintain your current schedule and hours. And then number 3, as always, save up for a down payment and closing costs, just in case the seller might not be able to help out with closing costs. You're prepared. And I will stress this again, the biggest thing is you don't have to reach out to an agent or a lender when you're ready to purchase. A lot of the buyers we are closing this month reached out a year before they were ready to purchase. Said, hey, let's put together a game plan. I'll stay in touch with you. We're going to write something out and make sure you're prepared and ready to go. So talk with us. Let's get prepared. Let's get a game plan together.
Yeah, exactly. Whether you're like 9 days you need a house or 180 days, reach out, because it doesn't hurt. It will only put you in a better position when you are ready to, pull that trigger. So, great idea. Great advice, Andrew. So one more question. This is question number 10, and I do have 2 bonus questions for you.
Yep.
I know we didn't plan that, but I'm just going to throw it out
Let's
there.
do it.
But my last question is documents.
Yep.
So through the home buying process, there's a lot of documents that's asked. What documents should they have prepared ahead of time?
Yeah, typically up front, it's pretty basic. It's going to be 30 days worth of pay stubs, your last 2 years of W-2s. We're going to go ahead and grab 1 month of bank statements to verify funds, and then we're going to most likely grab your last 2 years of tax returns if you're required to file. This is just a little bonus tip for my self-employed borrowers out there, my 1099 workers. Reach out early before you file your taxes to get an idea of where you are. That's a little bonus tip there. But
yeah, because what you make is not technically what that loan is going to be going off of. Okay, so
yep,
it's
always prepare ahead of time there. But to recap, just 30 days of pay stubs, bank statements, W-2s, and taxes. We'll grab your driver's license just to verify no misspellings on your credit report. That's it to start. We'll send you into underwriting, get all that approved.
So that's pretty simple to get pre-approved.
Yeah,
right?
definitely. It's not very stressful, and doing work up front is that stressful.
And I'm just going to throw this out there again. So if you do not have tax returns or anything like that, there are other options available to getting a loan and a mortgage. Typically, it requires like a bank statement loan or something like that. You may need a little more money down, as well as bank statements. So that's something we can get into another time. I just want to throw it out there just in case you don't have tax returns. I don't want you to think that you can't get a house.
Yeah, definitely reach out. There are alternative options. If you're a business owner, you haven't filed taxes yet. The bank statement loan programs, like you said, having that conversation, seeing what's out there is the biggest key to being able to get this done.
Okay. Well, thank you,
Yeah,
Andrew. I
of course.
appreciate that. So for the bonus questions, 2 bonus questions
Yes.
that even if you're a homeowner, you may not know the answer to. So I did want to ask him these 2 questions. So when it comes to refinancing, right? We were talking about rates earlier. When do you know is the right time to refinance, and what is even refinancing?
Yeah, that's another great question. So what is a refinance? It's where you take the original loan terms, the lender pays that off and generates a new loan for you with hopefully, most likely a lower interest rate. How do you know it's time to refinance? There's a couple different factors that go into it. Always look at a couple different things. How long do you plan on staying in the home, right? That's a big factor because there are costs associated with a refinance. I like to call it a break-even point. You want to make sure that the amount of money you are spending or the fees you're incurring to be able to refinance, how long will it take you to recoup that money back in the monthly payments you're saving? So essentially, you're refinancing into a lower monthly payment, but there are some closing costs involved. So typically, we just want to make sure that you have enough time in the home to recoup the monthly benefits of refinancing. It's one of those things that if your lender's not talking to you about a break-even point on your refinance, you need to ask about it because it makes a huge difference on if the refinance is going to be successful.
Okay. I like how you say refinance.
Yeah, refinance.
I'm like, refinance. Okay. That's cool. All right. So, Andrew, my last and final question, and I think a lot of people don't know the answer to this.
Yeah.
So, we all are usually in a great spot when we're going for our mortgage. We get our mortgage, we get pre-approved, and then life happens,
Yeah.
right? So, if we face some type of financial hardships, what are our options? Because we have a mortgage and we still have, the duty to pay that.
Yeah.
So, what can we do? What should we do? Or what's that process like?
That's a great question. So it depends lender to lender. With my company, you do have a grace period to the 15th to pay your mortgage without receiving a late fee. So there's a little grace period in there. After 15 days, there's a late fee assessed. If you have to go longer than that, we start going into the 30-day range. Call your lender before you can get to 30 days and see what's available. There are forbearance options out there and deferment options out there. Typically, we always advise you trying to make your mortgage payment and not using that as the first option because it can interrupt the way you build equity in your home by backloading your mortgage. There are also some state-sponsored programs that can assist with that. Again, call your lender early. Don't wait till you're 30 days behind or 60 days behind to figure it out. Call early, let them know, hey, something came up. What are my options available? How can we attack this with the least amount of penalties as possible?
Okay, awesome. So all I'm hearing today is contact your lender ahead of time. Okay, guys, you want to contact your lender, get a realtor ahead of time. You don't have to be ready like right now. I have clients that I know they want to buy in a year. You know what? We're making a game plan. We're fixing their credit. We're, they're telling me where they want to buy or what areas. Okay, now I can give them real numbers on what they can expect. Again, interest rates may change, market may change, but at least they know and have a starting point. So it is very important to call us before.
Definitely.
Okay, even if you haven't yet and you're in the process, you can still give us a call. But if you're not if you haven't started the process yet, definitely give us a call.
Definitely call. And to circle back to the pre-approval, pre-qualified question, if you're a year out, that's a good time for pre-qualification, just to see where you are, just to build up for the pre-approval.
Oh, that's awesome.
Yep.
Okay. Well, you heard it from the man itself.
Yes, call us.
Andrew Wells, thank you so much.
Absolutely.
I appreciate you coming out and giving us all this important information. I think it's well needed. There was a few things I learned myself, so I appreciate that.
Absolutely.
So if you're a homeowner or you're interested in purchasing a home, selling your current home, feel free to reach out. Give me a call. You can go on my website, newhomeswithdina.com. You can book a call with me directly. I can connect you with Andrew. Even if you already have a realtor, hopefully you don't, but I will connect you with him because he's great. So give me a call. Thank you so much for watching, and see you guys next time.
That's good.